Thank you so much, David, for coming tonight. So lovely to see you.
My pleasure.
I was wondering if you could tell me a little bit about what you guys are investing in the FinTech domain at the moment.
Sure. FinTech is a very exciting area these days, and we have an expansive definition. So we include property tech and insurance tech, and even some domains that are more cybersecurity, but related to financial instruments and institutions. So just start off with there's some fascinating new FinTech opportunities that are unlocking through financial engineering frozen assets. Mm-hmm. And to give an example, most Americans' largest asset is their home. Right. And so their home is a nice asset that you can use when you retire or want to sell and the kids move away and you want to downsize. But until then, that asset is frozen. Your money's just stuck there. So we've invested in a marvelous company called EasyKnock, based in New York, that is a sale leaseback for residential property. Wow. For the first time ever. Wow. And it hasn't really been done properly because people didn't figure out all the steps that were required to make it work. And I won't go into all the details, but suffice to say, it gives the consumer incredible flexibility because they can then buy the house back, they can sell it into the market, or they can stay as a renter in the home that they used to own, but it was just too much burden for them financially. So it gives them really flexibility. And we're seeing other things in companies that we haven't invested in that, again, offer the real estate frozen asset or lumpy assets a way to be more flexible. So this is where I think technology comes to bear. The technology that we're seeing applied to FinTech most importantly today is a combination of artificial intelligence, both machine learning, which is kind of the more basic style, and then even we're moving into deep learning, which is a more sophisticated model for algorithm creation. And then that's combined almost necessarily with big data. And we live in an era when data is being unlocked and uncovered and discovered and sensed at a rate never before seen by humans. But it was too much to analyze without AI. Right. So you need the combination. And then the new devices, of course, of smartphones and so on, liberate it to be delivered at scale to small businesses and to consumers. Because most of financial institutions benefited and governments benefited and wealthy individuals benefited from FinTech innovations in the past 50 years. But in the past 10 years, we're starting to see it now spread to everybody. And it's very exciting to see in developing countries the leapfrogging that goes on, where they didn't have much of anything, and now they have sometimes more sophisticated systems than we do because it's all new and it's all mobile and et cetera. Other issues. The regulatory environment has lightened up noticeably in recent years, and that's very positive because we get more innovation. The thing that is underplayed and misunderstood is that the proponents of regulation come on the scene and appeal to our heartstrings saying, oh, this is going to help the little person. And most often, in my experience, this is just one person speaking, the regulations are used to protect the incumbents, protect the powerful. Because who has the power at the table to regulate? It's the most powerful. So the deregulation effect is ironically liberating to help the under folks achieve new paradigms and new Pareto optimality, which is doing the best with the condition, with the circumstances present. That's positive. I'm a big believer that the economy is going to continue to grow for the next few years. I'm not seeing a recession anywhere. I can certainly be wrong. I'm not an economic prognosticator, but I just think that the animal spirits of the U.S. entrepreneur and the global entrepreneur and the consumer are pushing things forward in a very sustainable manner. In other words, we're not seeing the crazy risk shifting behavior that led to the mortgage crisis. When people were buying houses like crazy, but the risk was being foisted onto the American taxpayer unbeknownst to everybody. So I don't see a lot of that building up, except perhaps in the student loan portfolio. That's an area of risk, I think, going forward. But more broadly, we've done some surveys at Blumberg Capital recently, and we've found some very interesting statistics that the American consumer is, for the first time now, more confident about the privacy situation and artificial intelligence, and they see artificial intelligence as a way forward to help improve their security, improve their financial well-being, to deliver them services that do more for less, more efficiently, and that's good news.
Yeah.
Because we don't want the consumer to be a burden and cost of customer acquisition rise to heights that makes it unfeasible for startups to compete. We want startups to have an easy on-ramp to move forward, because that's how we spur innovation. And then we've seen a lot of M&A activity, mergers and acquisitions, where the startups are starting to get the attention of the corporate giants, and that's good news too.
Yeah.
Not everybody's destined for an IPO, and a lot of the products can be tuck-ins to the suite of offerings by existing major financial institutions who bring credibility, and they bring capital, and they bring regulatory.
Everyone benefits, yeah.
Exactly right. Very interesting, in the venture capital world recently, last 2 years, we've seen more corporate investors and more mega funds coming in than ever before. And they have inflated the prices, I will say, at the higher rounds, C's and D's and E round, and to some degree in the IPO world. But in the early stage, they can't really play terribly well there. But they're looking for those ideas. So as Blumberg Capital and other early stage investors and angels find the startups, then as we grow them, then there's a receptive audience with big, deep pockets to invest in the later rounds. And that's also a good thing, because the world needs more innovation. It needs to be well funded. FinTech is more capital intensive than some other areas, partly because of the paperwork, the regulatory issue, sometimes balance sheet issues come to fore. But again, one more thing that I'm starting to see. In our lending portfolio, we're starting to see a marvelous drop in rates that our lenders charge our companies who are on lending into various segments. I can mention companies like Fundbox, which does artificial intelligence-based underwriting and lending to SMBs, small businesses. And by doing it automatically, they lower the cost. They use big data to make their determinations, and they can lend and do a sort of a cash advance style transaction for small businesses that keep them with cash flow management in the pink. Wow. And that's nice. Yeah. And the debt prices that they're facing from their lenders is declining as they see the book pay off without losses, and they start to see the returns cohort over cohort, year by year, getting better and better in terms of quality. We're seeing it with EasyKnock that I mentioned in the sale leaseback for residential, and the biggest firms in the financial world are now backing these companies in terms of buying the book and doing the balance sheet, the off-balance sheet lending. So that's fantastic. What else can I say? I think cybersecurity is an unsolved problem, and it continues because cyber is very unusual. It's an unusual industry because in most industries there are just vendors and customers. But in cyber, there's a third party that's malevolent, the hackers, and they're always out to destroy both sides. They're, in the old days, they used to be sort of just interested in hacking and what do you call it? Graffiti, that kind of thing. What's it called? There's a term for basically just not malevolent in terms of money theft, but they just wanted to cause problems.
Destroy stuff.
Yeah, they just want to mess things up. But now you have real people stealing big amounts of money, and then you have the nation state actors. So you have three types of hackers.
Holding companies to ransom.
Ransomware, theft, fraud, you name it.
Yeah.
Why did Willie Sutton rob banks? That's where the money is. Today the money is online, so the money is being stolen online. And interesting, the consumer has been fairly protected because we have in the United States things like FDIC, the Federal Depository Insurance Corporation, which protects losses for consumers. And then the credit card companies essentially play an insurance role too. If you've ever had a credit card stolen, I have, and I've had it used by bad guys. I didn't suffer the loss because the credit card company or the bank backstopped it and covered it. And I think that's most consumers' experience, again, in the US. So, I do think that things like ransomware are going to start to pop their evil heads up further. I was staying at a hotel the other night, and I won't say where, but they had been subject to ransomware. They'd blocked all their systems. They couldn't function. And then the UK had a terrible system failure like that a while ago, where there was a virus that blocked all of the UK National Health Service scheduling a couple years ago. So it's an unsolved problem, and I don't think it will be solved. We invest in a lot in cybersecurity, and it is a job number one for many fintech companies to think that they should never be hacked.
Yeah.
It's always hard to keep your guard up, but there are better and better tools available. It's just that, again, usually you're trying to get customers and satisfy them, and now with cyber attacks, there is a third vector coming always from behind your back.
Another challenge.
Yes, indeed.
Look, David, that's a fantastic overview. Thank you so much. You've certainly enlightened me and hopefully the audience. And I'm so glad that you're here on this panel to enlighten us again.
Well, Fima, you're a terrific organizer and event coordinator in the Silicon Valley. We couldn't do it without you. You bring together very interesting groups, both of the speakers and then more importantly to me is the audience. And they're an informed audience. They ask good questions. They bring good deal flow to us. And so please keep doing it.
Thank you. And guess what? There's so many venture capitalists in the audience tonight, all these different venture firms. I mean, I do attract that but not as many as tonight. This is the biggest number. So isn't that interesting? They're coming all to hear you say what's the best deals.
Well, we shall see. I like to have it very interactive, so maybe we'll do a Q&A and learn from the audience as much as we share.
I've certainly been telling everyone, ask the questions of the investors, so we'll see what happens. Thanks again, David. Always gorgeous to see you. Thank you.